And the business loan interest rates for 2022 are hi, welcome in. This is Michael with Viral Funding Solutions, and I'm going to get right into the thick of things. You may have heard about the interest rates changing, and perhaps that's what pushed you into this video, or perhaps you've been following me for some time and wondering, what can I get out of a business loan? I'm price shopping, looking for the lowest interest. And I'm going to share something with you that'll be very revealing about interest rates at the end of this video. So you'll want to stick with me to find out what that is. And this is going to be an expert tip from a business loan broker like myself, who's helped out a lot of people get funding. Now I'm going to start from the broad to the specifics. In fact, I have a document here I put together that I will reference and look over for all the specific details. Yes, I have it all up here and I can tell you from that mind, but I want to make sure I don't miss anything. So let's get started with this. So the business loan interest rate you get will vary on a lender per lender case. Every one of them has different qualifications, specifications, constraints. So, and also the service that you go to will matter. So if you're looking to go, for example, through a bank physically or perhaps online versus one of these other online lending options where you go through a private lender who they're taking on 100% of the risk, and it may not be that they're having to ask you for collateral, then the interest rates will be a lot larger there. So what we're looking at with a bank, if we're starting there, we're looking at somewhere between prime rates up to about 5%. So it could be somewhere right now with 4.75% plus 1 to 5% of that. So you're looking at just below 10 or so percent. And that's a bargain in today's market when you think about this impending quote unquote recession with inflation, obviously the interest rates going up. How much higher will they continuously go through? And why right now is the most important time for you to look at getting business funding, as well as much more. I'll also be talking about that towards the end of this video, but not to take away from the interest rates. Again, my document here. And at a point, you could have said, well, can I get 2%, 3%? And it may still be a factor somewhere in the 3% range, but not very likely unless we were going to go backwards again and restart. But you're looking at that range somewhere between prime rates up to even about 13% in some cases. I know I said 10%, but it can go up a little bit more depending on the risk, your industry, your funding details, such as your time in business, your FICO, your revenue, the statements, tax returns, whatever shows, whatever we need, sufficient enough collateral, if we need it, how much equity, etc. The list can go on and on. Now, if we're looking at that and comparing it to an online loan, and then I'll jump into some of the stuff with like the SBA, you're looking at more between 7% to 100%, if not 7% to about 250, in some cases up to 350%. And I'm going to be going over what maybe that service. Maybe you've heard about it in the past from myself or elsewhere. So that's what you can expect when you're going online is at a bare minimum, if we're talking about 7%, we're getting more into the secured term loans, the secured lines of credits, those formats where you're offering up real estate, any other form of collateral, it's either real estate or equipment. Some services are built that way. Other ones are willing to accept those two along with accounts receivables, invoice factoring. If you've heard of that, unpaid invoices you get from your customer, you can give up to an invoice factoring company, which is one of the most attractive ways of giving up collateral. And you can really get the lowest rates with accounts receivable. So if you have that and you're interested more in not only AR, but also other forms of collateral, as well as other material that's unsecured, I'll leave information for you down below in the description. So once this video is done, make sure to pick up those resources, as well as get a free 6-step pre-approval lending checklist to get you approved for funding much faster. On top of that, a free questionnaire you can fill out to get a personalized and customized evaluation and analyzation on your best funding option and options, very thoroughly broken down like no other. So you're not wasting time. You're not making the mistakes that many other people go through trying to start an application. They don't get enough information and they're going down the wrong path. You don't want to be that individual. So we just spoke about traditional bank loans, physically speaking. You also have the ones online. In a sense, you can get somewhere between 6 or 7%. And we're calculating prime rates plus 2 or 3%, up to about 29% or so. And the reason these are a little bit higher in interest is because it's faster processes, less documentation, although it is in a way online banking, not going through your physical location. but there are more things to leverage with an online banking solution. And if that's something that you can qualify for, you might want to check one of those options out. I'll link to down below in the description. So SBA loans, I'm sure this is what you're curious to hear about. So it can vary depending on the lender that you go through. It might be the brokerage, how they do something in-house. But for the most part, you're seeing somewhere between 4.25 to about 6.25% on some of these prime rate solutions, plus 1 to 3%. So you're looking at somewhere, if we're talking about more of a whole number, between 5 to about 8%, 5 to about 9%. I've seen it go up to as well. Usually it's under the 10% range. And I know it isn't an EIDL loan that I'm speaking about. I'm talking about like the SBA 7As, if we're getting into the 504s, those two primarily, and there are a few other programs that are subsets as well. But the EIDL loan, as you know, it's 3.75%. And then for nonprofits, 2.75% or so. But at the time of me making this video, the EIDL is not available. It could be in the future. There's nothing showing right now that it will be, but anything can happen. And don't just sit on getting an EIDL loan because you get the best interest rates for the amount of years you get, the monthly repayment. I know it sounds good, but you're getting too comfortable. You have to understand realistically how funding works, and you should be using this funding for growth and expansion, if not COVID relief, business operational expenses, payroll, et cetera. On top of that, growth and expansion can really help your business out and determine the term length, the factor rates, and you'll hear me say that a little bit in a second on how that all works out. So equipment financing, this is another one people are curious to know about, and it's somewhere between 4 to 12% in interest. And usually these are monthly repayments. If you're working through an equipment leasing slash sales leaseback, leasing to own, you're renting an old piece of equipment, renting a new piece of equipment. You may want to make a full purchase on it. So I'll show you a different way, but that's what equipment financing is for, to help you. And it can vary depending on your credit as well. So you could be a higher risk if your credit is poor. Usually we're speaking 500 and above, up to about 600, and even less in some cases. They won't accept less than 500. So it's very important you fix this. I come across a lot of business owners, especially in the trucking world. Not only that, I've helped out people of all, like medical equipment, construction, you name it, anything. I've seen it, and I've helped people get funded and help them on the education of it. But fix your credit. If that's something that you need to work on, you want to dispute some things, you have late payments, stuff that you don't even know is holding you back, then I'll leave credit repair options down below, as well as further equipment financing, and all of these other options that you're listening to me here talk about will be down below in the description. So if you're also getting value out of this, let me quickly say this, and you feel somebody else will, it can be a complete stranger, a friend, and or a family member, please like it, share it with them, and they will get value from you knowing that you were able to help somebody out get the right education finally on all these business funding products, not only with their interest rates, but I go even deeper into other subjects and other material that they'll learn about, as well as you will. If you haven't seen that yet, I would greatly appreciate you. Now, we have term loan options, and these can fall into the category of it being unsecured and secured. Don't hear those words time and time again. Unsecured meaning it's not offered with collateral. Excuse me if you hear that. My phone wasn't on silent. You can hear somebody telemarketing. I don't know who that is, but just know that these term loan options can vary anywhere between 10 to 24% without real estate or any form of collateral, and that's what you will see. And to be more specific, and that's why I also wanted to reference this, because the market's always changing, is you're looking at about 1 to 3% per month on an unsecured term loan, usually between 1 to 2 years. Sometimes they go 2 to 10 years, but usually with these unsecured term loans, you see 1 to 3%. And I won't get into the qualifications. I have a separate video that I released on the SBA EIDL loan increase versus unsecured term loan options, and as well as more material I'll link you to down below. But not everybody will qualify. And even if you do, it doesn't always make sense to take that option. You have to use this 1 to 2 year time frame for a bigger return on your investment that you perhaps couldn't get in between 3 to 12 months, and to finance bigger purchases, vehicles, inventory, for marketing, hiring on more employees that'll then take on more time for you to train them, and perhaps your return on your investment will be a little bit longer. You're opening up a new building, a new location, and so forth. It can vary. So the larger the purchase, usually the better, and it comes with higher qualifications on that program. So 1 to 3%. And then if we're talking about securing it, with collateral, then you're looking at prime rates at today usually being about 4.75% to about 2 to 6%. So you're looking just above 10% into the early teens, if not late. But that just demonstrates when you think about you go to the banks and they're offering you the rates that you're getting, the prime rates plus 1 to 3%, or up to, in some cases, up to 13%, securing it with collateral, getting 1 to 2 years. What does that make you think? I have to be more strategic of how I use these funds. Will it be for one project, multiple projects? Will it be for something else to cover payroll, expenses? How am I using this productively? So when you look at it at the end of the day, it's not about the interest, but about your repayment. How can I get a longer term is one question to help you. And then the second is, what is my repayment? Can it be low enough for me to afford it? And we never give you something that you can't afford when you get to like an offer stage, if we're going through the underwriting and all this. So that's what you would expect with the term loan options. Let me make sure I didn't miss anything. A revolving line of credit, that can be 1% to 3%. And in these cases can be 1% to 3% that you're looking at as well. And usually they're offered in 6 to 9 to 12 months timeframes. I know there are some that can go even further out to like 18, 24 months or so. But those are for some of the most rare situations, and you actually need all that amount of time. And if you're looking for something longer term, we can get you on a longer term line of credit if it makes sense to. So cash advance products, these are what are called merchant cash advances. And these will go for generally 20% to about 250%. And in some cases, up to 350%. I put in little asterisks there. And I have a few more details, but I'm not going to cover that. It's for my notes. And so what these are is you're basically giving up a future amount of your revenue to the merchant or the lender. So whatever you're making in sales in the future and day by day gets taken out of your account. So one day you may have a higher amount in sales, so you get taken out more that day. And then the next one, you make less in sales, so you get taken out less. So it could be more, and not so much, I don't want to use the word predictable, but you understand that if you have lower sales, less is taken out, and that might be very helpful to you on some days when you're not producing. You don't have a great average daily bank balance. And in some cases, when you have more, you get taken out more. It's like, well, I didn't want that much taken out. And then it can possibly be somewhere where it hurts. But you just have to understand the financial structure of your business. And there are some who are called hybrid cash advances. And these, we don't just look at it being a variable interest, more of a fixed. So you know it's being taken out daily, weekly. That's usually how they work. They don't offer monthly because too many people go into defaults, and it's just not a good way of doing business with this service. And it is more of a short term, about 3 to 12 months, and then some of them offer 3 to 24 months. But 12 to 24 months, you're getting more into that term loan scenario that you can also qualify underneath these cash advances. So they are a benefit. Don't think of them as being wrong. People like to call them as loan sharks, hard money. But what you have to look at it is, how much time do you need these funds for? What would it make sense for you to get a year if you only needed this for this project of 6 months or everything to help cover you? You're going to produce an ROI. You take this funding, the benefit exceeds the repayment. You're doubling and tripling your revenue. So when it's about 7 months that you had to pay off $300 in a day, that may not be as attractive to you. You go, well, I just doubled and tripled my money, and this is the best solution for me right now. This is what I can qualify for. This is my next step to then get into the next one, or continue to get more funding over time with the same one, which is what I recommend. Not a lot of people see that. That is a pro tip right there. And right now you should be building relationships with your lenders, your underwriters, and your brokers, such as myself. And I work with the best lenders and underwriters out there to help you get the best offer directly or indirectly. I can help sort all this out for you. So that's a merchant cash advance in a nutshell. I have more content on it down below. Very attractive, one of the highest approval rate products. And again, just be strategic, whether it's 3 to 12 months you get, 12 to 24 months and above. Just know your bookkeeping. Maybe you don't work on it. You have somebody else you outsource it to, but understand your numbers. It's more important now than it's ever been, especially during this time. Invoice factoring. Again, I spoke about this briefly earlier. You can give up unpaid invoices to an invoice factoring company, and you can receive your funds much faster if you pay your customers on terms. If that's how the way that they accept, you accept their payments, then this is another way for you to get dispersed funding right away that you can use to bridge cash flow gaps, as well as use it for other purposes. And this can vary somewhere between 13% and above, up to about 60%. I just want to make sure I made a correction here, just because some of the things that are happening in the market. So 13 to 60% or so. And just to back up, with cash advances, it's in a similar way with an invoice factoring. company. It's not exactly the same, but you're selling a future amount of receivables if you look at it that way. Some cash advances, you're looking at what's called a factor rate, where they look at or called quote unquote total payback between 1.19 to about 1.69. And that, excuse me, simply means that if you have a 1.23 factor rate, we multiply that number by the amount of funding you received, and that's how much you'll be repaying back. And I can do all these calculations and help you out with and get you a ballpark rate, especially when we get you through the underwriting. I can look at all this for you. So that goes through in that format, and you can, in a way, look at it as 19 to about 70% interest on that if that's the way you want to calculate it. But there's other ways of it as well. Let me make sure I didn't miss anything. AR invoice factoring 13 to 60%, or you can look at it as a prime rate plus 2%, like 4.75% or so, plus 2%. So you're looking at somewhere up to about 7% or so in some of the most extreme. So if you think about that, when I said 7% at a maximum, and you're looking at it as a secured term loan, well, you might be getting a secured term loan for 10% and above, a little bit more, or maybe a little bit less or so. With an accounts receivable financing option, unpaid invoices, you get at a maximum of about 7% or so in today's market. Not saying that it will always be like that. It was at a 0.2%. I know that sounds amazing, but what you are getting now is what it is, and you shouldn't be looking again at the interest rates solely, but looking at the repayment. Unsecured loans, we spoke about that, 1 to 3% per month. Secured term loans, prime rates plus 2 to 6%. Secured line of credits, prime rates plus 2 to 8%, and usually those are backed up by accounts receivables and so forth. All right, so that will conclude everything in this video as far as what are the business loan interest rates right now in this market, and that could change over time. So there may be another updated video, but this is what you see here. And even if you learn something from this and you're thinking, hey, well, I want the lowest interest rates. Well, you should always be thinking to yourself, and this is the pro tip that I want to leave you with, as well as I've been saying it time and time again, is you shouldn't just be looking at the interest rates, but you should be looking at how can I get a longer term, if possible. If not, I'll talk to you about what you should do right here and now. But how can I get a lower repayment or the best repayment possible for this service? And jumping around one solution to the next, especially when you've already started an application, even worse if you already have an offer and you're trying to stack options, that's not good. So be careful. And if you don't get the longest term option, what you should do is work with that current lender, that broker, those underwriters, that team of people who can really help you and take care of you. It's safe and secure. You have an environment with somebody like myself who finally is going to show you the right path to take. And everybody has a different situation. But let's say you get 8 months and then you're like, well, I got 30,000. It's not everything that I wanted. Well, I'm going to use it. I'm going to renew it. I'm going to come back. Maybe get 10 months, maybe I get 12 months. And then we keep moving you 30,000. Now I got 40, 50, boom, boom. The list goes on and we drop your rates. So that's how you do this in today's market. You don't look for the maximum amount if you can't receive that. You don't look for the lowest interest rates. You don't look and shop for the lowest prices. Well, you should be thinking about to yourself every single time, well, oh, 38% interest? No. Well, what is the benefit? And does the benefit exceed the repayment ultimately when I get it? Well, the benefit of me taking the funding of 30,000 that I'm paying back 38,000 or 43,000 when we all think about the broker fees and lender fees, et cetera, origination that's taken into account. Then, well, if it's 43%, then well, I'm taking this and I'm going to build a patio set in my restaurant. I'm going to have a new opening in the back. Maybe I'm going to have an extension, maybe not a whole new office build or a new building, but I get 30,000. I'm doing 40,000. I'm going to be doubling that to 80,000. So I'm paying 38,000 when I'm making 80,000. So think about this as growth and expansion, and then you won't be so much reluctant to, well, the interest rates are climbing and people are causing fear. That's not the way to approach this. And so with that in mind, now you have expert tips, and I have a lot more of this content. If you would like to learn more, not only on business loan interest rates, personal loan interest rates, building business credit, fixing credit, taking advantage of different opportunities online, and you found value out of this, please look down below in the description for all the resources. And if you have any questions, comments, or concerns, please feel free to leave me them down below in the comment section. I'd like to hear from you. What have you tried that hasn't worked? That questionnaire form down below, that'll be the fastest way. Submit it. And if you have, be patient with me. I have plenty that come through, and I will be getting caught up on those and submitting them back to you here soon. Now, that is everything from myself. If you haven't subscribed, please go ahead and do so and click that bell notification icon so you do not miss any future videos. I will be coming out with. And that is all. Talk soon.